Congratulations, we have an offer on your house. This video is going to go over the offer process and give you a little knowledge prior to our meeting to review your offer or offers so that you can be prepared to make an informed decision. The first thing to remember when looking at your offer is that the offer price, while certainly is important, is not always the only and most important factor in the contract. So don't be tempted with a knee-jerk reaction to simply accept the highest offer. There are other considerations which we will briefly go over, such as, is the buyer asking for a closing cost credit? Are there other exorbitant repairs? What type of loan are they getting? Is the buyer only pre-qualified, or is the buyer actually approved? How much is their deposit and their down payment? How long before they can close escrow? Are they asking for any personal property included in the sale? And how long are their contingencies? As you can see, there are a lot of factors. Now, let's talk about loans. What kind of loan is the buyer getting? Is it a conventional, an FHA, a VA, or is it a cash offer? Maybe you think, well, why does it matter? In the end, the money is the same. They get a loan and I get paid in escrow the amount that they purchased it, less my mortgage and selling expenses. Well, it does matter. Each loan has its own requirements, and I will advise you depending on which type of loan the buyer is getting. Let's quickly go over the three most common loans. The first is a conventional loan. This is the most lenient loan when it comes to house condition. Buyers typically have to put a larger down payment, so banks are less worried about the condition of the house. The next loan is an FHA loan. Buyers typically only have to put down 3.5%, and it's a government-issued loan, so there may be required assurance about the house's condition. They may require a termite report with a Section 1 clearance. So let's pause and talk about termite reports, Section 1 and Section 2. When you get a termite report done, the inspector is not just looking for termites. He is also looking for dry rot and fungus to any wood members. The report will list damaged areas and classify them as Section 1 or Section 2. Section 1 items are things that are already damaged with dry rot or fungus or active infestation of any kind of termites, whether it's subterranean or wood termites. Section 2 items are items that are not already damaged, but these areas have conditions that, if not corrected, will lead to being a Section 1 item. A perfect example of a Section 2 item is a kitchen faucet that is leaking under a sink, and the wood at the bottom of the cabinet is not damaged yet. But if that water leak isn't corrected, that wood will eventually rot and become a Section 1. So FHA typically is only concerned with Section 1 items if a termite report has been specified in the contract. However, a VA loan will require both Section 1 and Section 2 items to be corrected, and the termite company will have to certify that the repairs have been done. So when reviewing offers, we need to take into consideration the condition of your home, what kind of loan the buyer is getting, what types of repairs may need to be done, and how much they'll cost you. Speaking of loans, has the buyer been pre-qualified or pre-approved for their loan? And what is the difference? A pre-qualification letter simply means that the buyer has spoken to a lender, verbally stated their income and expenses, and based on the non-verified information, the lender runs some numbers and issues what is called a pre-qualification letter. A pre-qualification letter really isn't even worth the paper it's written on. On the other hand, if the buyer has a pre-approval letter, or even better, an underwritten approval, then we know that the lender has taken the steps to verify their income, run their credit, and possibly even submitted their loan to underwriting, and that they are in fact qualified to purchase your home. That's not to say that something couldn't pop up during the loan process and cause a hiccup, but pre-approval is much better than pre-qualification. Let's talk about contingencies. In a standard contract, there are 3 contingencies that every buyer has, unless they choose to waive them. They have an inspection contingency, an appraisal contingency, and a loan contingency. All contingency timeframes start from the date of acceptance of their offer An inspection contingency is a period of time from when the contract gets accepted where they are able to get any and all inspections that they want on the house to make sure that they know the condition and make sure that they still want to purchase it. The most common inspection is a home inspection and a termite inspection and a roof inspection. Usually the inspection period contingency is 10 to 17 days. Next is the appraisal contingency. The lender will arrange to send an appraiser to your house. They will take photos for their report, look at the condition, and they will look for comparable cells in the neighborhood to come up with a value. The lender wants to ensure that they are not loaning the buyer more than the home is worth. Once the appraisal comes back, if it comes in at purchase value, then all is well. If it comes back low, then we have a few options. We can either lower the purchase price to the appraised value, the buyer can come up with the difference, or we can meet in the middle. Or, last case scenario, we can cancel the deal and everybody walks away. The last contingency is the loan contingency. This is where the lender is gathering all the buyer's documents, verifying their employment, having their loan underwritten, and giving the buyer conditions for additional documentation that they will need to provide in order to satisfy the lender. Per the contract, this contingency is 21 days. So at the end of each contingency, the buyer will need to remove their contingency, ask for an extension, or cancel the contract due to something to do with one of the contingencies. The shorter the contingency timeframes, the less time we waste should they decide not to continue with the purchase. Once the buyer removes all their contingencies, they are stating that they are moving forward with the purchase of the house, and should they back out or be unable to complete the transaction after that, that is when they are at risk of losing their deposit. A couple other items we will discuss when we meet is the buyer's purchase of your property contingent upon them selling a house? Is the buyer asking for any of your personal property, such as washer, dryer, refrigerator, or any other items to be included in the sale? As you see, there's a lot more to the contract than just the purchase price. So when we meet to go over your offer and discuss each of these items, then you can make an informed decision as to which offer is best for you and your individual situation. I will go over all of this in detail with you, answer any questions that you have, and as always, I am here to help and to get you the best offer on your property.